Remember when a slick slide deck and a wild dream could instantly secure a massive valuation? Those days feel like ancient history now.
It really is like the music abruptly stopped at the biggest party in town, and everyone suddenly realized they have to pay the DJ. Welcome to the Indian startup ecosystem in 2026.
The wild west of growth at any cost is completely dead. But the money hasn't vanished, has it? It's just locked behind a much thicker vault door. So, what is the actual combination to open it today?
The combination is no longer a charismatic story, it is cold, hard math. Investors aren't throwing darts at a board of cool ideas anymore. They are looking for businesses that actually work. They want clear revenue models, aggressive discipline, and rock-solid unit economics.
It feels like a return to traditional business principles, just wrapped in modern tech. You can't just sell the vision of 1 billion users if you're bleeding cash on every single one of them. If your customer acquisition cost is too high, the door just slams shut.
Precisely. Think of it like building a house. A few years ago, founders were selling the blueprint of a mansion, and investors bought it without even checking the soil. Now, they want to see the foundation poured and the first floor generating rent. Traction is the only currency. You don't need massive scale right away, but you absolutely need early, consistent proof of real demand.
Which puts an intense spotlight directly on the founders. It makes you wonder about the psychological weight of it all. The microscope is entirely on them, testing not just their market knowledge, but their pure endurance and execution.
And their adaptability. We are seeing a massive pivot away from traditional equity being the only holy grail. Founders are getting incredibly smart, exploring venture debt, revenue-based financing, and strategic partnerships. They are fiercely protecting their ownership while funding their growth.
That is a fascinating evolution. By choosing alternative financing, they aren't just raising money, they are buying flexibility. It is almost a quiet rebellion against the traditional funding treadmill.
It completely flips the paradigm. The ultimate takeaway for 2026 isn't about figuring out how to chase down investors. It is purely about becoming undeniably investable. When you combine clarity, relentless discipline, and real execution, the capital actually hunts you down.
Becoming investable instead of just pitching. That is a profound shift in mindset. It makes you wonder, as we look to the future, will this era of extreme financial discipline forge the most resilient generation of companies we have ever seen? Or will it quietly suffocate the wild, risky innovations that truly change the world? We will leave you with that thought.